Hi, my name is Paul, and welcome to episode 14 of my monthly stock portfolio series, where I invest $100 every month into Canadian securities. Last month marked the first full year of investing in this portfolio, and I showcased how my first month's investments performed over the year. But I didn't invest into MTY Food Group until February of 2022. It now being February of 2023, I thought it would make sense to take a look at MTY's performance in the portfolio over the last year, before going through the usual news and benchmark comparisons. And this past month's performance was very far from usual, so I think you're going to enjoy this one. But before getting into things, I just want to let you know that I do have a document that covers the goals and rules that I have set for investing in this monthly portfolio. So if you're interested, you can access that in the description box for this video. Or you could always just go back to the first episode of the series where I go over everything in detail. And a link to the series playlist, starting at episode 1, is also in the description box. As for MTY Food Group, over the last 12 months, the stock and the underlying business took shareholders along for a bit of a roller coaster ride. When I first purchased shares in last February, the stock was trading at a price of about $55. Within 1 month, I found myself already down nearly 10% on the position. But the declines didn't stop there. Despite a brief bounce back, the business continued to experience pandemic-related headwinds, and in mid-June, shares hit a low of $45, which is a 20% decline in a very short period of time. But equipped with a good understanding of the business model, the management's inclinations regarding capital allocation, the long-term growth opportunities, and the risks that the company faced, I concluded that shares were being heavily discounted. So rather than being fearful of the declining stock price, I took advantage of the bargain and continued to regularly buy shares of MTY. Since then, the company acquired Barbecue Holdings Group and Wetzel's Pretzels for combined costs of over 550 million Canadian dollars. These acquisitions together were valued at over 40% of MTY's previously existing business. But despite the relative size of these deals, MTY's management closed both without issuing any new shares. Plus, because both of the acquired companies produce positive free cash flows, the debt taken on for these deals are expected to be paid off swiftly, since even under more challenging conditions involving the COVID lockdowns, wherein MTY was generating less cash, the company was still able to rapidly delever their balance sheet. Now, these big acquisitions drew a lot of positive sentiment, especially among those familiar with the company's history of large acquisitions, picking up Kahala Brands in 2016 and Papa Murphy's in 2019, both of which increased free cash flows substantially on a per-share basis. This positive sentiment, of course, did drive up share prices, but just this month, the management announced a huge 19% increase to the quarterly dividend, taking it from 21 cents up to 25 cents per share. If you happened to watch my video where I discussed the Wetzel's Pretzels acquisition, you might recall that I was pretty skeptical about the likelihood of MTY announcing a dividend increase, on account of the debt being used to finance the recent acquisitions. Well, as it turned out, I was dead wrong. But I've got to say that being wrong on this one feels pretty good, since I'd imagine that MTY's management wouldn't be hiking the dividends so much if the company wasn't seeing some promising results from the new acquisitions and the existing business. Coming back down to reality, yes, that is a bit of speculation on my part, but I will obviously be waiting to see what the management has to say when the numbers get released in the annual report, before I actually have any conclusive opinion on the dividend hike. And the report should be coming later on this month, or possibly early next month, since as of recording this, there hasn't been any set date for it, but I will definitely be making a separate video to cover the report, since there are a lot of things that I'll be looking forward to. Getting back to the dividend, this really signaled a lot of strength, and share prices absolutely soared to the current $69.33 as of the market's close on Thursday, February the 2nd. That means that this holding in the portfolio saw a huge one-year increase of over 25.9%, and that's before factoring in the additional 63 cents per share in dividends that were paid out by the company in the last 12 months, which pushed these gains up to nearly 27.1%. That's not too shabby, especially considering the company is still only trading at a price to free cash flow of around 12 before accounting for the additional free cash flows being generated by Wetzel's Pretzels. Plus, the company has been facing a lot of pandemic and supply chain related headwinds that I believe will prove to be temporary, and if so, the company is likely to be operating with much more efficiency in the future. So I still think that there's a fairly large runway going forwards for MTY shares. But again, I'll have more to say on the matter once we actually get a glimpse behind the scenes in the annual report and the conference call. And that was all of the news that there was for MTY Food Group, since the number of grocery products being offered has remained the same for the past 2 months. As for the Morguard North American Residential REIT, they actually released some shocking news as well. In the announcement of the REIT's normal course issuer bid renewal, it was revealed that under the previous NCIB, the trust actually repurchased some shares, which is really big news, even though the number of shares repurchased was only 7,000. The reason that this is such a big deal is because the shares are being heavily undervalued relative to the underlying property value and the funds from operations that are being generated. Also, because the REIT has been vocally uninterested in doing share buybacks in prior quarters, we know that these repurchases had to have come somewhat recently. So this could mean a change in the management's opinion on capital allocation and could also mean larger repurchases going forwards, which would very likely drive the share price up towards the net asset value per share, which as of recording this is still well over 2 times higher than the current share price is today. And like MTY, Morguard will also be reporting their 4th quarter and annual financial results later on this month, with the report set to come out on the 14th and the conference call on the 16th. So I'll almost certainly be making a video on that topic shortly after the reports come out. Then last up was Knight Therapeutics, who had literally no news come out this month. So with the news out of the way, let's get right into the portfolio's performance throughout January. At the start of the month, I deposited my usual $100 of cash into the Wealthsimple account. I also had $2.88 courtesy of Morguard's December distribution, and I had 1 cent left over from December's investing. So I took my $102.89 and invested all of it into 4 shares of the Morguard North American Residential REIT, 3 shares of Knight Therapeutics, and about 1/3 of a share of MTY Food Group. On the back of MTY's big dividend raise, the share price jumped by over 17% in the month, going from $59.20 to $69.33 per share. Meanwhile, Morguard's share price saw similarly explosive increases, jumping up nearly 15%, climbing from $16.38 to $18.81. And again, this was just this month. Finally, bringing up the rear was Knight Therapeutics, whose shares saw a slight decline of about 0.4%, dropping from $5.29 to $5.27 per share. These results saw the month's $102.89 of invested capital appreciate to $119.34 when accounting for the dividend, which is an increase of nearly 16%. To put this insane performance into perspective, this month's upwards move, even before accounting for the dividends, outperformed my annual return goal of 12%, which is absolutely crazy and definitely not sustainable. So while I'm happy to have had such a strong January result, I'm certainly not expecting more of the same next month, though you wouldn't hear me complaining about it if it did happen again. As for the cumulative portfolio results, since inception, the portfolio's total market value is now a few cents over $1,457, which is a gain of 10.62% on the $1,317 of capital that was invested, which includes the cost of reinvesting the monthly dividends. This means that it only took 1 month to move my portfolio from being slightly in the red to very far into the green. But the question is, how did my portfolio stand up against the benchmark ETFs? Well, in terms of monthly performance, this month was a bit of a weird one. The S&P 500 and the Canadian All Cap ETF slightly underperformed my portfolio, but the Canadian Large Cap ETF and especially the Global Value ETF outperformed. The thing is, most of this monthly outperformance was due to the dividends that were paid, since each of the ETFs received their quarterly dividend last month, except for the Global Value ETF, which received its annual dividend. So the Global Value ETF received a total payout of $30 last month, which is what led to that 32% return metric that you're seeing here. When we look at the total portfolio performance, however, the monthly outperformance coming from the earned dividends doesn't create a real outperformance when looking at the bigger picture. This is because while the $30 in earned dividends came from the $1,300 of Vanguard Global Value ETF shares, all of it came in during 1 month, where the ETF invested $120 of contributed capital and remaining cash. So, while $30 makes up a large percentage of the $120 invested in the month, the more accurate impact of the dividend on the $1,300 portfolio is about 2.3%. On the other hand, the majority of my portfolio's gains came from share price appreciation, and my entire portfolio is made up of shares. That said, the Global Value ETF did have a big lead going into last month, and it's still ahead of my portfolio by about 1%. The rest of the benchmarks, however, have fallen considerably further behind, but are otherwise practically neck and neck with each other, underperforming my portfolio by a margin of 6.22% to 6.39%. This here is probably my favorite graph, since it shows all of the portfolio's performances net of contribution. So basically, just how much each portfolio has gained or lost in total so far. And it's here that we can see just how unusually strong last month's performance was. I went from negative $14 to positive $157. If you compare that to the benchmarks, it's not even close, and that includes the Global Value ETF, which received that $30 dividend last month. That said, at this point, every single portfolio being tracked does have a positive return, with even the worst performer providing at least a gain of 4.9% on contributed capital. And that's actually pretty good, considering how share prices had been performing even as recently as October. So even if you aren't very comfortable or interested in investing in individual securities, you should still consider investing in a diversified ETF, preferably one that gives you exposure to hundreds or thousands of profitable companies that earn you money all around the world. Because as long as you set some money aside to invest each month, whether that be $100 or $1,000 or even just a few bucks here and there, in the long run, your money will compound and it'll be worth way more than if you'd put it into a savings account or a GIC or something along those lines. So taking those words to heart, it's time to invest my contribution and dividend money for the month. And by now you should know the drill. My best ideas haven't changed during the recent market rally, so the plan is to get a hold of 4 shares of Morguard, 3 shares of Knight Therapeutics, and the remainder is going into MTY Food Group. So let's hop right into the account and see what we get. Alright, here I am in the portfolio. I have $103.12, so let's get right into buying our Morguard shares. And the goal is to buy 4 of those. Alright, and next is to buy 3 Knight Therapeutic shares. Looks like they've gone up a little bit. And let's see what the account says we have left. $12.62 is going to go into MTY Food Group. And it's going to be filled a bit later on. All right, so the MTY order is pending, and if we go here, there's no money left to be used for this month in the portfolio, so I'm going to hop right to when that order comes through. Okay, I'm back, and I have officially received 4 shares of Morguard for $18.62 each, 3 shares of Knight Therapeutics for $5.34 each, and 0.179 shares of MTY Food Group on a cost basis of $70.69 per whole share. So, as of the market close on Friday, February the 3rd, the portfolio holds 60 shares of Morguard worth about $1,120, almost 3.83 shares of MTY Food Group worth over $271, and 31 shares of Knight Therapeutics worth a little bit over $163. And once again, there was no cash left over after investing this month. Transitioning into the dividend tracking segment, January was, as projected, a step back up in total dividends received, achieving a new monthly record of $3.12, all of which came from Morguard's monthly distribution. This is enough to buy a pound of chicken quarters or pork loin, and unlike the noodle package from last month, these actually have some good protein, so slowly but surely, we're moving up in the world. As for next month, the portfolio is expected to receive $4.27, with most of that coming from Morguard, but about a fifth of it will be courtesy of MTY and the recent dividend increase. And this will mark the first time where the portfolio receives a dividend that is at least a full dollar higher than in the previous month. So that's a nice little milestone that I thought would be fun to point out. As for the cumulative dividends earned, the portfolio has now received a total of $20.23 since starting from scratch a little over 1 year ago. Now, if I were to just leave the portfolio as it stands and collect the dividends in cash, assuming no additional dividend hikes or cuts were to happen, over the next 12 months, I would expect to receive $47.03, which is an increase of over 7.9% from last month's expected yield. And this leaves my portfolio with a yield on contributed capital of 3.36%. And that's where I'm going to leave things until next time. But before you go, please remember that this video is not financial advice, and I am not a financial advisor. This video was made entirely for the purpose of providing inspiration and insight into my personal investment decisions, and it should not be used as a substitute for doing your own research. This video does not have the information required to make good investment decisions on individual securities. So again, I'm not a financial advisor. I'm just a Canadian who likes to invest and share my opinions with others. And in doing so, I hope that I was able to provide you with something of value. And if I did, then please consider sharing it with anyone else who might also benefit from it. Thanks for watching all the way to the end, and enjoy the rest of your day.